Morning. So just trading the EURUSD 1 minute chart. As we wait for some setups, I'll show just what I typically trade in this pair. So I have a couple patterns that I watch for. One's called a double pump. So we'll have a move down, a little move back up. We don't want it like really big compared to the down wave. Moves back down to the low, moves back up to the high, and this is where we enter. So this is where a lot of people get stopped out on trades because the price moves up, pulls back, it starts dropping, they get in here, the price does a little, what I call a double pump or fake out, where it hits everyone's stop loss that got short. Sometimes this will go just above that level and then head off, and even if it doesn't go above that level, lots of people panic out and then it eventually goes. So we use this pattern quite a bit. It can also go the other way. Upward move, move down, move back up to near the high within about a pip and a half, and then it comes back down to within about a pip and a half here. Hopefully, this is what we hope for. I use a 2.5 to 1 reward to risk. So this one I call a double pump or DP. A rounded bottom is pretty much like this, where we just have a really slow movement into a downtrend and we start to see the shift up. As you can see, we go from lower highs and transition into higher highs. So we move a little bit higher above this swing high, then we move up here, and then we're starting to take long positions once we have that established. Just waiting for little consolidations, pull back, and then shift in the trending direction. So maybe we'll see one of those today. I also trade a snapback. It doesn't look like there'd be enough movement to have a snapback. This is, this is almost one, but not quite. It'd be a much quicker version. See this H pattern right here? So we have this sort of H. So it's nice when we have a down move, a sharp up move, and then a sharp move right back to the bottom, and then we get this little consolidation. So once we start dropping back to the bottom, I need at least 2 bars right near that prior low, and that is a snapback. And it can also happen to the upside. We have a sharp move up, a pretty sharp move down, and then a snap right back, and then we have the pause here and then a breakout. So the difference between this and a double pump is the snapback usually takes place over a longer period of time. It's much quicker, sharper movement, and we get the consolidation here and a breakout. So they can sometimes overlap, but not usually, because snapbacks are more like this bigger pattern, whereas double pump is more like smaller patterns like this, where it's just a pop up, pop down, pop up, pop down on our way. So here we almost have a rounded bottom, but not quite, because we do definitely have slowing momentum. We have a drop, a move up, a drop. Not very much progress on that last drop, so that shows slowing momentum for the sellers, but then we don't have much buying momentum either. We haven't really cleared this prior swing high, and when we did, it was just a spike up. So that's why we wait for an actual move above a prior swing high, then we wait for the next pullback. This little spike up, not too convincing, and we're also in pretty low movement here. 10 pips in the last close to an hour. So a lot of this day trading is just sitting and waiting. There's often not a lot of action. The stocks can sometimes be a bit better for that because you have that 45-minute hour period in the morning where it can be pretty crazy and you usually have lots of action. If you're just trading one thing, with stocks, you get to pick, which crazy stock you want to place. You may have more action there. With the EURUSD, I'm trading it because it has the lowest spread. It's basically the top day trading currency pair. And when you start day trading the other things, you may be able to day trade them well with like a strategy that I use, but the spread can become quite an issue. So typically I'm just using this one. Before I logged in, I checked the news, and at 6:30, right when I was logging in, there was news out. It didn't affect me, and then the next news isn't out till 9 a.m. and I'll be done by then, because I usually trade from about 6:30 till 8:30, 9 o'clock, but usually I'm done by 9, so no news that's going to affect me. I just get out for the high impact news. I have this filtered so that it only shows the high volatility expected news, and so we can see the ones that are here. And we can see the one at 6:30. It was expected to have high volatility, but it didn't really affect it at all right at 6:30. So really low movement. This has been the case pretty much most of the week, where it's just been really quiet. I put out an article yesterday, or a YouTube video yesterday, and I'm putting the article on Trade That Swing today on being in the right mind frame for trading. And I don't mean in terms of how you're feeling that day, or because there's a lot of talk about that, like don't trade when you're sick, or if you've had a big fight with somebody, with your family or something, don't trade, because you're probably going to be in a different mindset that's not ideal for trading. This is more to do with it's a similar thing, but the parts inside of us that can affect us. So if we're this is why I tell people not to trade on their phone if they can, when they're just like out and about doing things, because if you're out having lunch with a friend and you just happen to look through your charts, it's hard to shift from like just being out and about to your trading mind frame. And you can click a few buttons and then be like, oh my god, like what did I just do? And you're like not in the right space to fully go through those trades, and it can have some pretty not so good effects. So here we have a potential rounded top, right? Because we have this little move up, a move down, a move up, barely makes any progress, move down, back to the swing low. So if we get a little bit more of a drop, a pullback, then we could start giving back a bunch of this rally that happened. So that is now a scenario. So now we are just waiting for a pullback and then a transition to the downside. Once we start getting that pullback, we can have our measuring tool on, if you're on MetaTrader, which I have over on my other screen to place my orders. I have it set up so that if I click my mouse wheel, it triggers the crosshair, and then you can just hold down your left mouse key anywhere after hitting that, and you can measure price bars. And same with here, there's a little measuring tool. So for example, if we were going to go short here as this started to go up, and we know that we're just waiting for the shift to the downside, we can measure this last price bar. Maybe go up to the top of that, so we know 2.8 plus that a little bit for whatever your spread is. If you're day trading, then you ideally want a small spread, like mine fluctuates between about 0.1, 0.4, and ideally if you could have that down to 0.1, that'd be great. So yes, we're looking probably at about 3.2 pips or so. So this will have to move, according to my strategy, for a rounded top. We need to get our entry point near this area here. So we'll need to pull back into this area. So we'll probably have a few minutes to hang out and wait for that. And it's all just price action. We're just noticing these shifts. So while I trade the patterns are really only meant to highlight things that are happening in the price action. So we can see we started moving lower here. The upward moves start to really lose steam here because we have a move up here. This one can only spend about 8 seconds above that prior high before getting quickly sold off. Lower high, it would have been nice if this went a little bit lower because then I could have got in on this drop here. Now we have a very confirmed move back to the downside. You know, we can just see lower lows, lower highs. If we connect these points. So we can see that downtrend starting to accelerate. With this down move, we also have the possibility of a double pump or a snapback. So if this drops back down here and then moves up again, then shifts back to the downside, we have a double pump. Like this. We also have a snapback possibility. If it moves up a little bit, maybe doesn't trigger my entry point up here or something, and then snaps right back to the bottom, consolidates, then we may have a breakout to the downside. So that's what I like about these strategies, always a couple of possibilities. The only time I get a little left out is when there is, and I'll have to add something into this strategy because I've traded this way before. I just haven't incorporated it into this plan, how I want to work it in. But on just when it runs like this, I don't really have much of an entry unless it performs a double pump or something like that. But if it's just running, I don't have an entry, and it'd be nice to have a bit of that. So we know snapbacks are typically going to take about 10 minutes to 15 minutes. So this would not be a snapback if it drops right here, pauses. This will probably end up being more of a double pump. Not that it has to, it can drop and do whatever it wants, but it won't be a strategy for me, or an entry for me. We're 6 minutes into this each here. So possibility if we get a little stall out here, we could be trading this, but it looks like now that it's moving up, we'll be more in the double pump territory. I like to be aware of how much the price has moved over the last hour or so. 630 to 610. So this high, we're looking at about a little under 15 pips. So not a lot of movement. We basically had this little surge, and other than that, it's been pretty flat within about a 10-15 pip range. So we're still within about a pip of that high, so that's good. We just need some sort of price bar here to give us an entry, and then or like a bar, and then if we transition below it, so now we can measure out this one. We're at about 1.5 pips, that'd be a 2 pip stop loss. Real quick, I have a position sizing tool up for my Forex book, Forex calculators, position size. Type in your account value, your account size. I'd risk 1% per trade. If you're new, risk less, 0.25% or 0.5%. This will change on every trade, so we'll have to come back to that in a second. So we may have a trade there, right there. We had a price bar. We started shifting to the downside. We took out the swing low of that. Right at 38. Stop loss 21.40. Profit target 21.33. And since I had this worked out in MetaTrade already, I knew what my stop loss was just by this measurement here. Now we're at about a pip and a half, add a little bit, 1.6 pips. That's a 2 pip stop loss. That gives us a 5 pip target at 2.5 to 1. So 2 pip stop loss multiplied by 2.5 is 5 pips. And then you get your position size by punching it into that calculator. So you know your stop loss is 2 pips, and it'll spit out the lots that you should be trading. So this high should be within about a pip and a half of the swing low here, and this swing low should be within about a pip and a half there, and it is. That one's about this swing high is within about a pip of this one, and this one's within about half a pip of this one. And we'll see if it keeps dropping or what it does. If you risk 1% of your account on a trade, then this means if it hits this target, you're going to be up 2.5% on your account. So a much quicker way to potentially compound the account than swing trading or investing, because if you risk 1% on a swing trade, it's going to take, probably at least a few days, maybe a few weeks to hit a 2.5 to 1 target. But on the flip side, you can also lose money extremely quickly day trading. I also want to make sure that my stop loss is at least 0.2 pips above the high, plus the spread. So I don't use FXCM, I'm using a different broker, so the numbers are sometimes a little bit different. 21.35. Yeah, so right around where my stop loss is perfect. It looks a little bit, so the high on my actual broker's chart's a little bit lower than this, so my stop loss would be a little bit further above this swing high, which is good. It's about half a pip. So sometimes because of slippage or anything, we could have a little bit of a different stop loss distance than we expect, and then we'll have to adjust that stop loss, and then we can decide if we were originally taking that trade based on a sort of target we had in mind. This one's a fairly small target. It's not really coming into play with anything else. Then, I feel okay to adjust it a little bit, but if this swing, if my target originally was like right near a prior high or a prior low, then I'd probably want to just leave it where it was, and that would mean my risk reward ratio is a little bit lower because I expanded my stop loss a bit to accommodate the most recent high. We don't want it just abandoned somewhere. And that target gets moved or not moved because we wanted it in that specific spot. Or if there is room to move the target, then we adjust it out to 2.5 to 1. I will occasionally, if the market's moving really big, put it... One second here. I will move it out to a more than 2.5 to 1 reward to risk, but not a lot of movement right now, so there's no reason to do that. Take what you can. I usually will stay in trades until they hit my stop loss or target. No reason to get out. This one just hit a new low. It has not moved above that prior swing high, which would stop us out. So we're still moving in an overall downtrend. No reason to get out. The video on, it's called like Why Did I Do That? Or the reasons we make mistakes when trading. It talks about in this situation when it doesn't move and we're sitting there, a lot of feelings might come up, and one of the ways to deal with those feelings is to, when you're not trading or before you start trading each day, is to have a little negotiation. Like, notice that part of you that gets scared, and your trader and that part have a little negotiation so that they can come to an agreement so that this part that's scared doesn't interfere during the hour, 2 hours, 3 hours that you're trading. So it's just basically a little agreement. And that'll help alleviate a lot of that emotion, those knots that happen while trading. It's getting closer to our target, but still no reason to get out. We're dropping. Even though it moves up, doesn't affect anything. We're still making overall lower lows, lower swing highs. Just keep yourself calm, centered in your trader mind frame. If any other part of your brain tries to take over, then it's just a shift back to the trader who's like you can just like imagine a professional trader, if it helps, just sitting at the computer, and that's you. Unaffected by what the price does. You have a strategy, you follow it. We don't know what this is going to do. We can start thinking about other trades that may develop if we do get stopped out of this. What would this be? We have a little move down, a small move down again. If we move back above this swing high right here, then we'd have a potential rounded bottom. We'd have to move back above that point, have another pullback, and then a potential trading opportunity. But we don't adjust our stop loss for anything yet, because that's a pure hypothetical. So we can note this is moving very slowly, just barely broke below this. Right where this little level, and it's just stalling out right there. Doesn't affect our trade, just something to note that the price action is moving slowly. So that when we get into trades, we're not expecting an instant profit. Like this, we gotta sit through, grind it out. But hey, if this hits our target in the next few minutes, that's still 2.5% in 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes, 10, 11, maybe 11 minutes. On really quiet days, if this is like right at my target and just not quite hitting it, I'll close the trade. But we want to be really careful about doing that, because usually if it comes close, then we end up closing it up here. That can really affect our risk reward. And I'm out of that trade. So what I meant by that is if it comes down here and then pops back up, and we end up getting out, on a little blip up here, now our risk reward ratio is 1.67 instead of 2.5. If you do that often, your risk reward just crashes, and it's going to be much harder to make money consistently. I think one of the things that, I know, one of the things that saves me is this ability to hold for the 2.5, so that at the end of the week, my risk reward ratios are usually 2.5, pretty close to it, sometimes a little higher, sometimes a tiny bit lower, but that really saves your ass, because then you can be wrong quite often. So then you go through, you actually see what your actual profit is, divided by using, let's say, 1% of your account. So that one had a little bit maybe extra position, and then I had expanded my stop a tiny bit more than I expected, and then also expanded my target, so I ended up with, what was that? So plus 2.81 R. And I just use R so that it's always, no matter how much you're risking on a trade, it's the same thing. So you could decide to risk $100 on a trade, and if you risk $100 in every trade, you're making $280. For somebody who's risking 1%, they know they could make 2.8%. For somebody who's risking 0.5%, they still know R is 0.5%, so this means you're making 1.4%. Just putting some notes to myself on my MetaTrader. It's a good example why we don't try to mess with our stop loss too often, especially when the price isn't moving really strongly. Because if you expanded it out and then had to sit through this, you'd be probably pretty pissed at yourself. You'd have to really focus on staying in your trader mind frame and not letting those other parts of you who are mad at yourself get in the way. So the day trading's definitely on the fly type trading. We have slow movement here. We have a possible rounded bottom. Because we've now taken out this little swing high here, just marginally. Pullback would set up a possible move to the upside. Why? Because even though we're in an overall downtrend, this is dead. Like, you know, we dropped, could only move 3 pips below the prior low. So we can see this is slowing if we look at the angles. So this is becoming much shallower. And now if this swing low stays above there, we'll be seeing a transition up. Let me just switch back into my trader mind frame to analyze this instead of discussing. See a little bit of a, like maybe a price bar in here. This is a pretty big, for not much movement, a 4 pip stop loss, because the price has to move 10 pips to hit a target. That's a long way to move up on a choppy day like this. I much prefer these types of trades, 2 pips, 3 pips max. About 20% of how the price has been moving is a good, so at 17, yeah, maybe like 3.5 pips absolute maximum for the stop loss right now. See how this one is. 2.7 plus a bit for the spread, that's about a 3 pip, so I can plug that one into MetaTrader. That means 7.5 pip target if we end up with that trade. Then you want to plug the 3 pips into your position size calculator just to get an idea, right? Because you may have to change this quickly on the fly. It's moving a bit below, which means that stop loss is expanding a little bit. I just want to measure one thing before I take this trade. Did this actually slow down? So we have this low. Swing low to this swing low. It's only about a pip and a half. And then this swing. So that actually accelerated a little bit at the end over what it had done here. Let's measure out this price bar. Still at about that 2.7 pips above this red bar. So a 3 pip stop loss would be okay. Triggered in there. multiples on that one that I ended up getting. 38. Sorry, I was looking at the wrong trade here. 327. I was looking at my account history. 372. Stop loss. 42. Nice. Yeah, we're right on the 2.5 reward to risk, and stop loss is just below. So here's an example where we can see my target is right near this prior high where the price had some trouble getting below it or getting above it. And we know volume's a little bit low, so in this case I am gonna drop it a tiny bit. We can see we've shifted above this swing high now. Here's an example of getting distracted. I should not be on my phone, but I knew I had a important call coming through, so I really got to make sure I'm in the right mind frame. We'll pause the recording for a second. Okay, so only gone for a couple minutes here. The price is starting to fall back, but overall we still have this little uptrend going on. So can't bail on this trade yet. You know, price can move around. Look at it. Occasionally it makes these like really swift movements like here, but even then, you know, if your target a little bit lower, you gotta hold through some chop. This one we know we're going for about a 7 pip target. That's, you know, most of these bigger movements. So that's, you know, this one's about 11 pips, this one 9 pips. We're gonna have to capture most of a move. I know too, I took a little bit, my position size was kind of in the middle, so I opted for the little bit larger position size, so I'm still not too worried about it. I'll still probably end up with a 2.5 reward to risk based on my 1%. So I don't do that very often, but I just want to be out because it's so quiet today, like not a whole lot of movement. How much we moved here? Yeah, about 17 pips over the last, looks like about a couple hours. 7 to, yeah, the high and low over that period, going back to 5:30. So yeah, about 18 pips. 15 pips in a 2-hour period is like my minimum, so I don't want to get too greedy here. So yeah, we're going to bring that down just a tiny bit. So we're still above that 2 to 1, and I mean it could blow through it, we don't know, but at the same time it's just, yeah, I don't want to get too greedy on a day like today. Right now we're pretty close to the 2 to 1 reward to risk. Trade. I think it ended up being a pretty good one. So you take whatever your actual profit was divided by, if you're using 1% of your account, divided by 1% of your account. Very close to my ideal, 2.5 to 1. And I like that I got out, you know, kind of below this problem area. Doesn't mean it can't explode through, but I'm just saying on a slow day where I barely have enough movement to be trading, that's a pretty good exit, pretty good reward to risk. Just looking at some. It was a big night for swing trades going out on this current or on the stocks. So just seeing what's out there and happening real quick. And yeah, we had enough room to get out there, but you can see it does seem to have a bit of a problem getting through that area again. Doesn't mean it won't eventually. So these risk reward tools are helpful for just knowing what your risk reward is and helping you out with some levels for, you know, on MetaTrader or whatever. But they don't reflect your position size. So I might say you're making 2.2 to 1, but if you have a bigger position size, then, you know, your risk is actually bigger than you expected, but so will your profit. It all evens out though. So if, you know, one trade ends up with a little bit bigger position size, another one ends up with a little bit smaller, another one ends up with a little bit of slippage, so you have to adjust your stop loss. Other times, you put out a 4 pip stop loss, and after the trade is entered, you realize, oh, I only need 3.5, so you adjust that stop loss, you reduce your risk. It all evens out. So I'll always have my trading plan next to me. I like hand-drawn pictures, so I have a bunch of little patterns that I've drawn with a whole bunch of little notes on them. And I like that because it's like me. I drew that. I know what it means. If I take a snapshot of a chart, it doesn't quite mean the same thing to me. I do that with my swing trades. I like having examples of my swing trades from the actual charts. But for day trading, for whatever reason, I like to just hand draw some little pictures of the things I like to trade, and that seems to keep me on track. So again, we are at 7:43. If we go back to 5:43, again, I think we're still at about about 20 pips of movement overall in the last 2 hours. That's not too bad. But like I said here, on the lower end of what I like to trade. But hey, 2 winners. The last 2 days have been pretty choppy. At least we're getting a bit of follow through, right? Because once you take a trade, you need at least one more push in that direction. But you can see we're pretty... those targets pushed it to the max pretty much. Usually got some just kind of melodic dance music or something playing just to kind of help keep me calm. So do we have any trades here? Not really. This is more just a consolidation. It doesn't really fit the double pump. If we moved up, moved back down, then we'd have some distinct kind of price waves in here to trade. Nothing like that right now, though. So this is the boring part. We don't have too much in the way of setups at the moment that could occur. We also want to keep in mind, so why I put this down. non-volume. Because volatility makes it easier for us to get in and out. When something's moving a lot, it's a lot easier to jump in for, if we have a 5 pip stop loss and the thing's moving 100 pips and we're just trying to grab 10, 12 pips out of that. That's pretty easy to do when the price is moving 100 pips whipping around. When we're trying to capture 5 to 7 pips when the price has only moved, in the last hour during this entire time moved about 15 pips. We're trying to capture half of that movement. That's going to be a little bit harder. So just if, there's a trade that comes up, it may be a valid setup, but it's just kind of like, something's not great with it. Or we don't have a lot of room till the price hits one of these levels, because the last few days the price has just basically, once it started moving in a range, it just stayed there. And we don't want to let the last days affect us, but it's just something to be aware of, that we're getting in these ranges recently and the price is kind of respecting them. So, if we have a valid trade, we take it. But if there's something wrong with it and we're in low volatility, then I'll just leave it. So there's that little distinction between, is it a great setup or is it meh? So here we have, let's just draw it in. Double pump, we can see we're a little bit off the low here. I'd prefer, like I said, if this isn't a great pattern, I don't want to trade it. So I'd like to see it drop down a little bit into this area here. What I'm saying, it doesn't mean that this can't take off and shoot higher, but I'm going to feel no regret if I skip a trade because it's not good and the price just happens to randomly move. There are all sorts of movements that I consider random because they're not part of something I know. Something else is causing them other than a pattern I know. If I miss a move because of a pattern I know typically causes that move, that's on me. So we have had that little drop below, little false breakout. That's nice to see. If we stall out, have a tight stop loss. Remember, low volatility, we want to keep that stop loss tight. Dropping too far, so that trades out. I was just punching in my stop losses just in case it turned higher, but now we are outside of 1.5 pips, I would assume. So there is one possibility for a trade here, and that is that we have a double pump variation. So a double pump variation is when we get something that looks like a double pump, but it's skewed or off, so that the highs and the lows or one or the other don't match up. So then we need to wait for a move back in the trending direction, and I would need a consolidation somewhere up in here. So we have a move up back toward the highs, a consolidation, and then a breakout. This way I can enter on the breakout, stop loss just below, control my risk. But that's looking very far-fetched at the moment because this is a fairly big sell-off for the context of the day. I got a busy day today, so I'm going to cut this day short at about 8 o'clock. The girls are home from school today, so I shouldn't hide away in my office. That was weird. No rounded top here because we actually like accelerated into this rally here. We can see pretty sharp movement. It was like moving choppy over here. I'm looking upwards with this. So we can see pretty, not a big movement there to the upside, and then we have a bigger movement. So this doesn't show any slowing, it doesn't show any rounding. And then we don't really have a lower swing high here. You know, they're just kind of even. We have the nice drop, which is nice, but it doesn't really fit a rounded top pattern. This one either was not, this was a pretty ugly one, which is, we didn't end up taking it. We took a double pump later once the price had dropped off. So that's something we can keep in mind for here. Double pump, possible. We could also have a snapback, rise up, snaps right back to the bottom, consolidation. Well, like I said, if I'm done at 8 a.m., that only gives me about 7 minutes. So this was a little quicker day, maybe about an hour and a half. Good for doing a video though. Shows some overall price movement. Yeah, so any pattern now would take at least a few minutes to form, and then a few more minutes. So I'm going to call it a day here. But I mean, just for interest, we can watch and see if anything has the potential to set up, even though I won't be trading it. For interest, we could see if this would have hit, so we're at 2.2. So I still may have got out of my price 44.7. Let me see what I got on my charts. Yeah, so I actually would have got out at the original target. It would have taken till this move right here before the drop to do it. So I'm glad I got out at where I did. Like I said, when it's low movement, be okay with a little bit less. We don't want to be greedy. It also means we still have to stick to our plan though. We don't want to be bailing on trades like crazy. So this kind of happened yesterday, which ended up in a losing day. I did have one trade that moved quite well in my favor here. And again, like we had gone choppy, we had basically news, and then it went right back to choppy, and I was going for the 2.5. If I would have adjusted it a little bit, I think it would have had, yeah, all the way down to 2 to 1. Two to 1 I would have got out at. 2.5 I didn't, but that's how it goes sometimes. Today I was a little bit more in the zone. Yesterday I made a mistake early. Today is, and I recorded the last 2 sessions, but I did find it a little hard to focus for whatever reason with knowing the video was going. Today seems a lot better, so maybe the practice helps. And yeah, no mistakes today. Traded pretty cleanly. And yeah, the mistake yesterday, so maybe also just noticing the little bit lower movement after the news. Could have probably adjusted and made that a winning trade. So yeah, I'm going to call that a day, and that's how you day trade the EURUSD. And we put in our total numbers. So we'll just add it, and this would be less commissions, of course, but I don't put in commissions on the charts because they can vary so much by broker. From about $1.50 per 100K up to, I've seen some that charge $7 per 100K. So that's a huge difference. One could take away all your profit pretty much, and another one is going to reduce it by, if you're up 60%, you'll still probably be up 50%. With a broker that's taking a huge commission, you could be up 60% for the month and only be up 10%. So plus 5.25. Ooh, that'd be nice. 5.25R. 2 wins out of 2 trades. Short a day. And there we go. That's how we trade. Hope that helps you out. If you got any questions, let me know.